Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. There are three major patterns developing here in recent times. Firstly, there is the possible early February to date bearish halfway hesitation. This has a potential in the 192 area. The next pattern is indicative of the current bearish state of the market and gives the bearish angle of attack of this market. It is the mid-February to mid-April bearish Andrews pitchfork. The market is currently in between the upper time above, currently 217.10, and the middle time below, currently 191 3/4. The third pattern is still in primary construction and is the mid-November 2021 to date head and shoulders top with a neckline acting as backup support today. The neckline, currently 201.95, is the nearest to the current market and thereby indicates that this proposed head and shoulders top is almost done construction. So what next? Well, it very much depends if prices can drop down through the November 2014 high at 201.35, because then we can look at additional possibilities on the downside and not just target X below. Meanwhile, the top side is capped by the flat long moving average, currently at 217.90. and the 50% Fibonacci line of the August 2021 to February 2022 move at 2217.45. Should prices punch up and maintain levels over these, then the bearish half hesitation as well as the head and shoulders top and even the bearish Andrews pitchfork will all cease to be primary drivers in this market, and something else will have to take its place. London coffee. The key difference seen here in London compared to the New York contract is how the peak of the market was back in late December 2021, rather than when New York had it in early February 2022. This difference has been crucial to the early formation of a pattern that has been seen here in the London contract much earlier compared to the New York contract. We have a November 2021 to February 2022 head and shoulders top. Admittedly, the first shoulder is split, but the action nevertheless stacks up as a legitimate pattern. The neckline is currently at 21.26, and the market, which had broken down through it back in March, ended up having some difficulty since then in penetrating the support below that stretches from 2004 all the way down to the secondary target X in the 1935 area. So it's 2004 down to 1935. However, today we seem to be getting ready to have another go for this week. By the way, the primary target had been achieved some while ago, and as I've often pointed out, secondary targets are harder to achieve. Additionally, we also have the possibilities of a newly drawn mid-February to early May bearish Andrews pitchfork. It is way too early to say if this pattern will work, but it is still there. The market is currently in between the lower time, currently 1935, and the upper time, currently 21.49. The final pattern is the possible late February to date bearish halfway hesitation. To be honest, this one has had so many false starts that I'm treating this latest effort with a pinch of salt. However, if prices do manage to make their way down through the congestion between 2004 and 1935, then the target X1 for this bearish halfway hesitation pattern would be in the 1895 area, right off the bottom of my daily chart. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.